Welcome to The Explainer. Today, we're diving into a market that is, frankly, teetering on the edge of chaos. And it all seems to boil down to a single explosive quote and a clock that is ticking down. We're going to break down the geopolitical tensions sending shockwaves through oil, stocks, and, even crypto.
So let's just jump right in with the single biggest factor driving everything right now: a direct military ultimatum from the United States to Iran. The language being used here is, well, it's extreme, and it's putting global investors everywhere on high alert for whatever might come next.
And this is the deadline that has everyone holding their breath. 8 p.m. Eastern Standard Time tonight. This one moment in time has sent tremors through the entire global financial system, and it really sets the stage for everything we're about to talk about.
So, what's really at the heart of this standoff? What are the specific demands that have brought us all to this incredibly dangerous cliff edge?
What we're watching is a high-stakes game of chicken playing out on the world stage. On one side, you have the U.S., demanding that Iran immediately and completely reopen the critical Strait of Hormuz. But Iran? They're not just rejecting a proposed 45-day ceasefire. They've come back with their own 10-point counterplan. They want a permanent end to the war and a total lifting of all economic sanctions. Right now, it looks like there is zero middle ground. Now, this geopolitical brinksmanship isn't just a war of words. It's had an immediate, and I mean severe, consequence: a massive shock to the global energy supply. And the fallout from this goes way, way beyond the price at the gas pump.
To really get a sense of how big this is, you have to look back in time. And what this chart shows is, well, it's terrifying. The current loss of 11 million barrels of oil per day absolutely dwarfs the 5 million we lost during the infamous 1979 oil crisis. And that crisis, remember, redefined the global economy for a decade. We are in completely uncharted territory here.
And you can see the real-time impact right here. Oil prices are just soaring. West Texas Intermediate crude is pushing past $113 a barrel. But look at the physical choke point. Commercial traffic through the Strait of Hormuz, a vital artery for global trade, has plummeted by a staggering 95%. The world's energy supply is literally grinding to a halt.
And here's the part that's really got people worried. Experts are warning that even if a peace deal were magically signed tomorrow, the structural damage is already locked in. Key natural gas facilities in places like Qatar and Iran have taken damage that will take, get this, an estimated 3 to 5 years to fully repair. That means a tighter global energy supply and constant, long-term inflationary pressure are basically baked into the cake for the rest of the decade.
So, how is this whole energy crisis spilling over into the stock market? Well, while the obvious players like energy and defense are getting a boost, the darlings of the last decade, big tech, are facing an absolutely brutal correction in the middle of all this uncertainty.
I mean, just take Meta. The company's stock has plunged 33% from its recent highs, and it's getting pummeled from two different directions. First, you've got this rising tide of regulatory risk, with a ton of lawsuits accusing it of harming youth mental health. And second, investors are getting really spooked by the massive, uncertain spending on AI infrastructure. We're talking a projected $125 billion, which has them worried about short-term profits.
But wait, that's not the whole picture. At the exact same time, Meta is finally pulling the plug on its failed $80 billion metaverse project, a move investors have been begging them to make. And on a fundamental level, the company is still reporting incredibly strong quarterly sales growth, close to 30%. So you have this wild situation where the story around the company is terrible, but the actual numbers, they're still looking really good.
And it's not just Meta. You're seeing a similar story play out with Microsoft, with its shares tumbling 34%. The market is seriously questioning if its huge investments in AI data centers will pay off anytime soon, and it's worried that AI could disrupt its super profitable software business. This has squeezed its valuation down to a price-to-earnings multiple of just 20, a low we have not seen in a decade. That's the market basically screaming that it's lost faith in the short-term story.
And this pain is being felt pretty much across the board, even hitting big international players. The e-commerce giant Mercado Libre, often called the Amazon of Latin America, has been hammered by the strong US dollar and all these inflation fears, sending its stock price tumbling all the way back to levels we haven't seen since 2020.
Okay, but this is where the story gets really interesting, because you have some value investors who are looking at these massive corrections not as a reason to panic, but as historic buying opportunities. They're pointing directly to Mercado Libre's fundamentals, like its stunning 45% revenue growth in dollar terms, as proof that the market is just completely overlooking strong performance because it's caught up in a fog of fear.
All right, let's pivot.
If you think the stock market sounds conflicted, you have got to see what's happening in the world of digital assets. The crypto market is being pulled in two completely opposite directions at the exact same time. It's a total tug-of-war.
To understand what traders are looking at, we need to quickly define a key term, the MACD crossover. Look, don't worry about the jargon. All you really need to know is that it's a technical signal that traders use to spot a potential big shift in market momentum. A bullish cross on a long-term chart, like the weekly one, often suggests a major turn away from a downward trend and into an upward one.
And that's the tug-of-war playing out right now. On one side, you've got these bullish technical signals, like a potential weekly MACD crossover for Bitcoin, plus over $250 million in short positions just got wiped out, which forces buying. But on the other side, you have this huge headwind of high oil prices and stubborn inflation, which is just terrible news for any risk asset, and that includes crypto.
And this bearish case? It's so strong for some that analysts over at Bloomberg are floating a scenario that is, well, it's truly catastrophic. They are arguing that as this whole era of easy money comes to a close, Bitcoin could crash all the way back to its pre-2020 equilibrium price of around $10,000. A collapse like that would wipe out years of gains.
And just to throw a little more uncertainty into the mix, a wave of nearly $900 million in token unlocks is scheduled for this week. Basically, a whole bunch of previously frozen tokens from projects like Aptos and Babylon are about to be released onto the market. That could create this huge, sudden wave of selling pressure in an already very fragile environment.
So what does all of this mean? All this conflicting data, what does it mean for you, the investor? From geopolitics to tech stocks to crypto, it seems like everything is boiling down to one classic dilemma.
On one hand, you have the very real possibility of a looming global recession. Fueled by an energy crisis and geopolitical chaos, this is a moment of maximum risk. But on the other hand, you have fundamentally strong, growing companies trading at what some are saying could be once-in-a-generation discounts, a period of maximum opportunity.
And this leaves us with the one final question that every investor has to answer for themselves. When fear completely dominates the headlines, when the charts are bleeding red, what do you see? Is it an unacceptable risk, a signal to run for the exits? Or is it a generational discount, the very signal you've been waiting for to jump in?